Hi dear traders and investors, today is Wednesday, February 12th. Let's discuss the charts for the euro and the pound sterling and try to predict their further moves. Yesterday, both the euro and the sterling traded higher amid the empty economic calendar for the US and the eurozone. Demand for the euro was still decent. The highlight yesterday was a testimony of the third Chairman Jerome Powell. The market behaved oddly despite Powell's remarks about the central bank's plans to maintain interest rates at current levels. He said that current economic conditions allow the Fed to refrain from further monetary easing. Powell referred to the latest non-farm payrolls which fully satisfy the central bank. He also said that Trump's trade tariffs might fuel a surge in inflation and hinder economic growth. In this context, the Federal Reserve is poised to keep the ongoing monetary policy unchanged. The market response was strange. Commonly, the US dollar gains ground and risky assets lose value after such comments. This time, trading instruments responded in the opposite way. Meanwhile, traders are already adjusting their trading decisions to US inflation data. That's what I'm going to tell you about. The Eurozone releases reports of secondary importance today. The US inflation data is on investors' radars today. The CPI is expected to inch down to 0.3% in January from 0.4% a month ago. The annual CPI could have remained flat at 2.9% as in December. If the forecast comes true, the Federal Reserve will have no excuse for another rate cut. If the actual data is weaker than expected, it will deal a blow to the US dollar in addition to Powell's remarks about putting interest rates on hold. The signs of easing inflationary pressure in the US are bearish for the US dollar. In turn, this could lend a helping hand to the euro and the British pound. The core CPI is also expected to grow by 0.3% in January on month. A downtick in annual core CPI from 3.2% to 3.1% will be the third month of decline. This will also weaken the greenback. All in all, we should stay alert to the market reaction to the inflation data. Another thing, traders will pay attention to comments by Fed policymaker Raphael Bostic and Bank of England official Megan Green. Their remarks will hardly influence market sentiment because the US inflation data overshadow all other events. Now the time is right to discuss the technical picture. According to the 1-hour chart, the euro-dollar pair is extending its climb this week. The instrument is trading within the channel between 1.0287 and 0411. If the price falls to 0344 and makes a false breakout, we will have an excuse to buy with a target at 0379. If it's hit, the door will be open to 0411 and perhaps 0440. Once these levels are reached, I will plan short positions bearing in mind a drop of 25-30 pips. Targets for short positions could be set at 1.0379 and 0411. If the buyers do not assert themselves at 0344, and if the pair breaks this level and settles below it, the instrument will fall to 0316. Then 0287, which is a lower border of the sideways channel, will be around the corner. Then I will plan long positions bearing in mind a bounce of 25-30 pips. I will set buy targets at 1.0316 and 0344 on conditions of a false breakout. As for the British pound, we saw serious growth yesterday. It jumped by more than 120 pips from an intraday low to high. This signals a resurgence of demand for the pound sterling after yesterday's comments by Andrew Bailey and other Bank of England policymakers. It makes sense to open long positions at 1.2418. A false breakout is the reason to add more long positions. The bulls aim to grab 2462. A breakout with the opposite test will push the price up to 1.2505 and 2545. Perhaps this level will be tested after the US inflation data tonight. If so, I will plan short positions pricing in a drop of 35 40 pips. Short positions in the first half of the day are possible during a false breakout at 24.62 and 25.05. The bearish target is obviously 24.18. If I don't see active buying in this zone, I will plan short positions with a target at 23.75. Inflation acceleration in the US could push the pound-dollar pair down to 23.32. Here I will plan long positions, bearing in mind a bounce of 35-40 pips. Thanks for watching.